edge when I'm in the red? Do my losses taste like things you never said? Was your patience just a paper thin hedge? Or were you always short on the emotional edge? Cause I get the sense you track my worth in the swing between my gains and hurt. You said you like me when I cared less. Translation, like me most when I obsess. You watch the candles rise and fall, but never ask what that does at all to someone who bets with bleeding teeth and stares down risk just to feel relief. Do you only love me when I'm green? When the chart is smooth and the tape is clean? Would you kiss me through a margin call or cash me out before the fall? Do you only call when I'm up bad? You ghost when the VIX spikes mad. Is it me you want or the version who wins? Or are you just here till the trend thins? You laughed when I said this felt like war, but still check the screen before the door. You love to say I live too fast, but you only stayed when the trades would last. Your fingers trace my losses slow. Said you're addicted like I didn't know, but you stayed anyway. Why is that? Just like the high of being attached. Your time, your love, like a breakout fake. All signals, no soul, just give and take. You like the version of me who smiled, the one who slept, the one in denial. Do you only love me when I'm green? Not the wreck beneath the P&L screen. Would you stay through a drawn out bleed? Or are you just here for the dopamine? Do you only call when the chart's divine, but duck out when I lose the line? Am I a man or just momentum? Would you even love the real sum?
Oh, brother, oh, brother, oh, brother. Good morning, and welcome back to another episode of the Kohrs Show. It is a beautiful Monday, December the 15th. We are kind of in the last major stretch of trading this year. Folks, I'm so happy you could join me at the crack of dawn today. I hope you had a phenomenal Friday. I hope you had a phenomenal weekend, and I hope you're ready to have a phenomenal Monday. Once again, thank you for being here. As I said, at the crack of dawn, we have so many things to chit-chat about. Yes, I'm going to recap a little bit of last week, more so specifically what happened Friday. I know there's a lot of people with ants in their pants because we saw a little bit of red on Friday, but remember, when in doubt, zoom out. If you want a more detailed breakdown of my thoughts on Friday and this upcoming week, I highly implore you to watch the update video from last night, but really it goes like this. On Friday, I get it. The market sold off, and as soon as we go down in excess of any amount of red, everyone freaks out and says, why are we going down? But I've kind of noticed this interesting trend in the world of retail trading that when we go up, no one really asks the question of why we're going up. It's just as if that's expected. And then all of a sudden, when there's a bit of red, everyone's like freaking out of why is that happening? When in doubt, zoom out, look at the daily chart. And in reality, yeah, did we have a red day on Friday? We did. We gave back some of the recent gains, but in reality, we're still just in that sideways, choppy, directional, like no directional, non-directional movement, I would argue. But what's really, really interesting is if you take a look under the hood of what happened on Friday with respect to the options market, you're going to realize that people weren't buying protection. People weren't going long puts. They were getting out of calls. So if anything, that could be selling to open. It could be selling to close. We now have the data. It was selling to close. So a lot of it, not all of it, of course, it's not like there's only a monolith type of a trade, but a majority of it was honestly just locking in profits. And if you look at the time of the year, if you look at what's been going on, it's not the craziest thing to lock in some of your profits. So I just wanted to put that out there. Of course, I'm going to back up what I'm saying right now with a bit of the data this morning, so you don't just have to take my word for it. But overall, my personal bias in the short term, old MK's bias, is the bull camp is still in control. I believe all of the data still does favor the bull camp. And right here, I'm looking for any opportunity to buy the dip. Now, I want to be clear. Obviously, if the overall market loses some key levels, and of course, I'll be going over that this morning, yes, then my bias will change. Of course, you should never be permanently bullish. You should never be permanently biased, especially as a day trader, scalp trader, swing trader. As an investor, yeah, you should probably always be bullish, especially when it comes to quality blue chip stocks. But I'm talking about for active traders, you need to take in the new information as it presents itself. And as of this morning, I really don't have a reason to believe that Santa Claus is not coming to town. So that's the skinny on the situation. I get it, a little bit of a hiccup on Friday, but I am still honestly optimistic about hitting 7,000 either by the end of this calendar year or the start of next year. So I want to put that out there to everyone. Just kind of let you know my thoughts. Of course, I'm going to be doing my best to kind of back up what I'm saying rather than just hopium of like how I actually came to this conclusion. So just want to get that out there. But most importantly, I hope you had a great weekend. I hope you crushed it on Friday and the little bit of a sell-off didn't somehow screw over your accounts. But hey, we have a whole nother week ahead of us. So I do appreciate you joining me here at the crack of dawn. Thank you, thank you, thank you. Very quickly, I just want you guys to read this disclosure right here. Public, as they normally are, is the partner of today's stream. I've been partnered up with them for years, and it's for good reason. It is the main brokerage I trust to trade with, especially when it comes to the world of options. If you are a trader, aspiring trader, especially in the world of options, I highly, highly, highly recommend you at least check out this brokerage. And the reason is pretty simple. It's the only brokerage I know of that pays you, the trader, a rebate every single time you trade an options contract. Doesn't matter if it's a call or a put, doesn't matter if you're buying or selling. And as you can imagine, you get even more of a rebate when you get into more of the quote unquote complex strategies such as iron condors or something like that. So more on them around the opening bell. I just want you to read this disclosure, understand that when you're involved in the market, yeah, there is risk. Of course, you should know that. But obviously a shout out to Public for being today's stream partner. Pinned to the top of chat in the description of the video. I highly recommend you use that exact link rather than just going to the website or just downloading, because if you use that link, you'll start out at a higher rebate tier. There's a good chance if you've been here for any amount of time, you've heard me pitch it. And if you're one of those holdouts that has not yet got on the brokerage, you might as well do it. It's free to download. It's free to sign up. It's free for you to check out. And I think as you like really realize what they're about, you start using it, you're going to realize why I like it as much as I do. So shout out to Public for being today's stream partner. And on that note, maybe I should really get rocking with my job today. Stock futures rise as big week of economic data kicks off. So not only are we getting a bunch of economic data this week, it also happens not just be the monthly OPEX, but obviously it's actually the triple S quadruple witching this Friday because it's a quarterly OPEX. And this is basically the final real push within the market until we get clearly into the holiday season starting next week. So folks, you know, this is that moment that you'll just leave it all on the line. You leave your heart out on the field and you do everything in your power. So just to give you a little bit of a sneak peek of what's going on this morning, the SPY recovering pretty decently, the Qs recovering pretty decently, the Russell recovering pretty decently, Bitcoin not recovering so decently. So the equities market is looking good. Actually, the commodities market is looking really good as well. We still have some of these metals, gold, silver, copper, looking very, very strong. It's actually just kind of the crypto market that right now is faltering a little bit. But overall, I would argue the bulls are in control. Now, taking a step back, just looking at the largest picture, just because we've been following this narrative a little bit, and I do want to keep you guys apprised of the situation. Ukraine and U.S. to resume peace plan talks, focus on security. We were looking at Kohrs and Poly market and the odds of them getting a resolution by the end of this calendar year. At one point, we saw it was 12%. Then it dropped to 10. Then we dropped it to, I believe, 8, and now since then it's even lower. So we're still making some progress, but it seems as if the ultimate goal is still decently far away. Ukraine gives up on joining NATO in bid to shift the dial in Russia peace talks. We knew that was kind of a non-negotiable from the Russia side of the table of no. Ukraine not joining NATO. For the longest time, Ukraine was holding out on maybe they could somehow finagle that, but it seems as if, at least being reported by CNBC, they are giving up on that one particular demand. So maybe as we get into the table, both sides starting to compromise more and more, maybe that could be indicative of we're getting closer to the solution. But I just wanted to cover this. I know in the very short term, this isn't the most impactful thing, but on a global scale, I think it's good to be somewhat of an informed global citizen. So I just wanted to kind of cover this because this has been news obviously for years now. I remember the day this all started, circa 2022, and then it got even crazier in 2023. This has been a multi-year aspect of our life, this particular narrative. So it does seem as if we're closer to the end than to the start. Obviously, knock on wood on that particular statement, but I just want to keep you, I guess, a little bit in the loop as we get some of the big announcements. All right, bringing it to the overall market, I do need to remind you that we have this concept of bullish seasonality, and specifically for this time of the year, the Santa Claus rally, which is the seasonal bias for the market to rally into the conclusion of the year. Does this happen every year? No, but it does happen with enough accuracy that obviously it gets the name Santa Claus rally. And if you dive into the data, it truly is profitable in a general sense to be bullish this time of the year, kind of pretty much into mid-January. Now, does this happen every single year? No, but it does happen enough that it's worthwhile for us to chit-chat about. This is the seasonal skew over the past 20 years worth of information. If you dive into the last 5 years worth of information, you're going to see the next 3 weeks in a row. Count them out. 1, 2, 3. Shout out to Edgefield for this data, is bullish. But I do want to remind you, if you look at just the last 3 years worth of information, this particular week that we're in right now is actually a little bit more bearish, while next week is bullish. So I just want to put that out there, that in the past couple of years, there's been a little bit of a mismatch of who's doing what and when we're doing it. But I do want to let you know that the final, let's call it 2-ish weeks of the year, generally is won by the bulls. Now, this time around, one of the largest things influencing the market, and this is some of the craziness that we ended up seeing last week, relates to the current state of monetary policy. Out of many, many things that came out last Wednesday, remember we got the 25 bips rate cut. We found out that the Fed is doing quantitative easing, but they're not calling it quantitative easing. We found out from the SEP that the forward-looking expectations for unemployment, GDP, inflation, and the Fed funds rate for next year is pretty good. And the only thing that had a little bit of a hiccup that made people question what in the world is going on is actually the Fed fund rate expectations. We know we're somewhere between 1 and 2 rate cuts next year. Let's just call it 1.5 for right now. But it seemed as if the bar is being set pretty freaking high for the next rate cut, and that's exactly why Fed decision in January, the odds as of right now are 76% chance that there's no rate change in the month of January. Remember, in a quote-unquote normal year, barring any emergency meetings, there are 8 FOMC meetings in a calendar year. Sometimes, I guess when I first learned about it, I assumed it's every month. It's not every month. Technically, you only have a scheduled of 8, and there can be more if there's emergency meetings, but the first one is January. They do take off the month of February, so people are saying, okay, like maybe they're just waiting for all this data, and we're going to see how the new year starts, and then from there, they're going to have almost a whole quarter worth of information to make the next decision in March. So people are kind of looking ahead till March, but obviously the situation does change pretty dramatically. And speaking of situations changing very dramatically, I don't know how many of you clocked this over the weekend, but all of a sudden, the market isn't so sure about who the next Fed chair is going to be. You can see from one announcement between 3 and 3:30 on the 12th, all of a sudden, the odds of Kevin Hassett, remember, the current director of the National Economic Council, basically a member of the Trump administration, he was the front runner. And then all of a sudden, one little update happens, and it's a different Kevin that is all of a sudden very, very much spiking, Kevin Warsh. So right now, we have a legit race for who's going to be the next Fed chair. Trump says Kevin Warsh is a top of Fed chair candidate list. President should be consulted on rates. President Donald Trump on Friday said that Kevin Warsh has moved to the top of his list as the next Federal Reserve chair, though Kevin Hassett also remains in contention, according to the Wall Street Journal. I think you have Kevin and Kevin. They're both, I think the two Kevins are great. So basically, Kevins are leading the race. We just don't know which specific Kevin. He is a former governor of the U.S. Federal Reserve. Feel free to take a deep dive into him. He does have a background in this particular realm of work, if you will. But I just want to let you know how quickly things change, especially when it comes to decisions from the current sitting president. Kind of always keeps us on our toes. So for the past how many ever weeks now, we kind of all assumed Kevin Hassett out of nowhere was just going to randomly get announced. The odds were very high. Kalshi, Polymarket, just all the murmurs on the street were Kevin Hassett, Kevin Hassett, Kevin Hassett. And then one little update on Friday, and all of a sudden, we have a 50-50 shot. We have a 50-50 shot. The odds are telling us it's pretty high. It's Kevin. We just don't know what Kevin. So that's another thing to keep in mind. Now, as that first article was relating to, we have a lot of major macroeconomic events this week. Nothing really special happening today. There are a couple things coming out, but nothing to really run home and tell mom about. It kind of gets rocking tomorrow, where we're going to be getting kind of a mixed report of October and November readings, just kind of on the job side, and I'm going to be coming back to that in a second. And then fast forwarded to Thursday, we're getting the interest rate decision out of Europe. That's going to be a big one. We're getting an inflation report for here, a manufacturing report from here, and then on Friday, we're getting another inflation report. So basically, we're still in that catch-up phase from the BLS, the Bureau of Labor Statistics, from when the market was, from when the government was shut down. The market was still operating, and the market was operating in the dark. So this week, we're getting a lot of that info. What to expect from the double jobs report on Tuesday. I actually don't know this stat. I probably should have looked this up. I don't know if we've ever gotten double jobs reports before, ever in the history of the market, but we are tomorrow. The government shutdown put the jobs report behind schedule. This week's release will bring data on October and November, though some of the information will be missing. More specifically, the report will reveal the unemployment rate for November and some data on hiring in October. So we're getting October, November information. The information looks backward, but is expected to fill in the blanks on the status of the job market at a tumultuous time for workers. Remember, the somewhat soft underbelly of the labor market is what the Fed is currently citing for the reason to cut rates. The report won't, however, include the unemployment rate for October. The Labor Department couldn't conduct the survey needed to calculate that rate while the government was shut down. It will mark the first time in nearly 80 years that the agency is unable to calculate the jobless rate. My question to all of you, how tight are our tinfoil hats on today? Do you think that they legitimately just didn't have the data, couldn't conduct it, and they're like, or do you think something a little bit more funky is going on at play? I mean, this is the first time in nearly 80 years that we will be skipping a piece of information as important as the jobless rate for the most important economy in the entire world. 80 years. We almost hit 100 years of getting this data, and all of a sudden they're like, we're gonna skip one. Nah, we're gonna skip one. I don't know. Maybe my tinfoil hat's on a little bit too tight this morning, but I do find it pretty interesting. So anyway, obviously, tomorrow is going to be kind of a wild day with that. We're definitely getting some useful information, some information the market very much wants heading into the conclusion of the year. And I bet the market even wanted this information before the most recent Fed development. Obviously, we had the Fed interest rate cut last week. I'm sure everyone involved wanted this particular set of data. U.S. stock futures rise amid bullish calls for 2026. So not only talking about what's going on this week, but the setup for 2026, which, if you ask me, I think it's going to be a choppy, wild year. I think at the end of the year, the bulls will prove to be victorious, but I personally believe we're setting up for a wild ride. So this is a pretty good breakdown from Bloomberg to kind of understand how all the announcements from this week are going to be setting the foundation, at least for the first quarter of the upcoming new calendar year.
Let's focus in on this busy roster of central banks, data. What do you think has the power to surprise, Paul? Where are we going to see some volatility being created?
Yeah, hi there, Anna. Well, so lots of potential volatility in the FX and rate space this week. It all spins around or off of the Fed, of course. The Fed cutting last week, but then sort of signaling that it might be going on hold for a little bit of time. So that gives the market a time to calibrate where other central banks are going relative to the Fed. The Bank of England is coming along. The market is expecting a cut, although a close vote. And what we get in terms of the readout on how many more cuts there will be will give us close indications.
Once again, because he has some sort of specialty accent here, I want to be clear. They're talking about this upcoming week, the interest rate decision from the ECB, the European Central Bank. So basically the counterpart to our central bank, to our Fed, to our pal. They're going to be deciding on Thursday of this week. Oops, I thought the spacebar would work.
Indication of where to trade sterling and gilts as well. That'll be quite interesting. And then we have the ECB the same day, likely to raise its forecasts and stay on hold, maybe, pointing towards a hike at some point in the future. So euro sterling also could look interesting on that metric. Then we get to, for Asia, the big one on Friday, the Bank of Japan.
That's going to be a big
Everybody
one.
expects them to hike and to signal that more hikes will be coming as well. That hasn't been helping the yen so far, so maybe finally it will get a little bit of support if the BOJ can sound hawkish enough to convince people that the rates gap between Japan and the Fed is going to start to narrow a little bit more. So that's, I think, where we'll be focusing on and looking forwards to it at the end of the week.
OK, so a busy week for central banks ahead, Paul. But last week, at the end of it at least, seemed to be more dominated by the AI jitters than the Fed cut. I wonder what you see for stock.
She's referring to the somewhat lackluster earnings report from both Oracle and Broadcom Wednesday and Thursday of last week. Both of them ended up getting hit to the tune of double digits.
Stocks towards the end of the year. Lots hoping for a Santa rally. Are we going to see a great rotation?
Yeah, I think that's a really interesting one as well. On Friday, you certainly got a sense of that. And through the back end of last week in the US markets, this idea that people are pairing their Fed bets, pairing their tech bets that have been doing so well. Those worries about the build out, the pace and whether it's sustainable, the cost and whether they can fund it as well. And people thinking, well, why not let's spread our chips a little bit wider across the surface. So banks, for example, have been faring well, and other stocks that are more kind of offering more value at these rates. So I think that, at least into year end, the market's going to continue to toy with that theme. But I don't think that the tech story is dead by any means yet. The AI boom still has a lot of potential, and people will find more reasons to get excited about that into the new year.
So that's the busyness of the week ahead. We've already had some data, though, China data. We were just talking to a guest about that, Paul. What was your takeaway?
Not good. China
data
is
pretty gloomy.
Bad.
And the market's taken a little bit of a knock there. We've also got some negative sentiment in the property space, of course, coming from Vanke, the latest of the developers to come under some fiscal duress there as well, struggling with its debts. So there's still clouds hanging over the economy. The market doesn't seem to mind all that much, though. Chinese equities have still been performing well on these growth stories, on China's tech story, as it happens, in the AI space there as well. So people looking a little bit more optimistically and favorably towards the Chinese market, despite these clouds, and hoping that in the new year we'll get more stimulus as well.
All right, so on that note, because I think it's a big enough deal, I do want to quickly cover this. China's economy is deteriorating on several fronts. Broad-based weakening spans consumer spending, investment, and real estate, as in the three we've already been talking about literally for years. I don't understand this. This is one of the few things, well, not few things. There's many things in life and specifically within the market that drive me up the wall. But the one thing I really just don't understand is especially why Wall Street professionals for years have been telling everyone, get into China, invest in China. I mean, some of the most respected people in this game are saying China, China, China. And I don't understand, because for years, we're still just getting bad reports. They are on tilt. It might not seem like it from the surface level, but when you consider what's going on with their shadow banking, what's going on with their real estate, what's going on with just the cultural shift in the company, they're becoming more westernized. We're seeing it. And all of a sudden, the current, I suppose, behavior of the government is coming into question, and there's a bit more discontent. I think China has a legitimate amount of issues, and I wouldn't be surprised. This is by no means a short-term call out, but I wouldn't be surprised in my lifetime, obviously a little bit later in my lifetime, that I think they're going to be falling from the world's number 2 economy. And I think if anything, they're going to end up settling around number 4. I think right now, in terms of legitimate growing economies, you have to consider India and you have to consider some major South American play, potentially Brazil. I think maybe that could be a little bit disputed, but I think there's going to be a South American country that leapfrogs China, and I think India will as well. Now, once again, I don't think any of this is happening like tomorrow. I'm talking multi-decades out, but right now, I think especially with the population collapse that we're currently seeing in China, when you extrapolate this out, like when there's less population and then that less population ends up growing up, maybe they are legitimately trying to incentivize having more kids right now, but it's just not working. There's crazy stuff going on, and I think in terms of world economic powers, and this type of stuff does take quite a while to change. I think we've already been seeing a shift in China, so just wanted to throw that out there. Bringing it back home, not technically an earnings season, but I do want to let you know later on this week, after the market closes on Wednesday, we're going to be hearing from Micron. That's basically going to be the AI related report of the week, so Micron, and then after the market closes on Thursday, Nike and FedEx, and maybe a little bit of BlackBerry. I just wanted to call those out. I guess maybe even Carnival on Friday. I'm just trying to think of the tickers that I see you guys chit-chatting about the most. So Micron, Nike, FedEx, Carnival, all reporting this week. Feel free to either screenshot this graphic or go to @eWhispers on Twitter. If you haven't already, sign up for the newsletter, macros.locals.com. It is free. Comes to your email inbox every single Sunday. I break down what's going on in the market, little cheat sheet for earnings, little cheat sheet for all the major macroeconomic events, and then most useful, especially for my day traders, scalp traders, is the seasonality of each individual trading day based on the last 27 years worth of information. So the better part of 3 decades. After this, I'm gonna have to say the better 28 years. I'm for a year now. I've been saying 27 years, but this is gonna be the first time in a hot minute that I actually have to update my next call out. But anyway, today specifically is leaning bullish. It's not the most bullish day we've ever seen, but it's definitely not bearish either. So it's leaning bullish. Tomorrow's a bit more neutral. Wednesday is bearish. Thursday is leaning bearish. And then Friday is actually absurdly bullish. So a little bit of flip-flopping back and forth throughout the week, but I do want to let you know, with OPEX in mind, very important triple witching, this is a very bullish day. I mean, look at that win percentage. Generally, you're in the realm of 50-50. The bulls have won this Friday 79% of the time. And just to clarify, this data is gathered from buying at open, selling at close on the S&P 500 futures market. So it's specific to that Globex session. But I do want to let you know that the odds for this Friday are actually very, very, very bullish. And once again, you could get this information for free, macros.locals.com. It's in the description of the video. Now, bringing it to today specifically, here's a quick look at the overall situation. Yes, we hit an all-time high in late October, lower highs, lower lows, fake out breakdown, strong recovery, and we've just been grinding up since then. At the start of today's show, I was talking about the sell-off on Friday that freaked a lot of people out. This is what I'm saying. When in doubt, zoom out. You're going to realize that this bar is still pretty much within just the range we've been. This isn't a breakout. This isn't a breakdown. It's a red day, and we gave back what we did on Wednesday and Thursday, but that's all we did. We just returned to the levels that we saw on Wednesday. So I get that intraday, if you were watching this, you're like, oh, wow, that's really bad. But then when you look at the daily chart, you're like, oh, we're still just kind of exactly where we've been ever since the start of December. Now, on that note, I do want to let you know that there is a downside gap fill to 6776, and obviously the current all-time high is 6920. Important levels to watch on a swing basis. Looking at the Nasdaq, there is a downside gap fill to 25,069, and there's an upside gap fill to 25,887. I also want to point out how NDX, the Nasdaq 100, the actual index, perfectly bounced off that 50 EMA on Friday. That's exactly where it found support. So on the downside today, if that ends up coming to fruition, that's going to be a key level I'm paying attention to. Now, drilling more so into today specifically, if the market were to open at this exact moment, we would be trading at 6,864. So that is roughly in this zone where my cursor is right now. As I always do, I mark out the previous trading session high, low, and close. That is the green, the red, and the white horizontal line. The white block is the transitional zone, considered to be bullish above, bearish below, and choppy within. And then the final thing on your screen are the yellow horizontal lines, which are basically all the major open interest levels. Basically, it's where we see the big money plays currently. This situation is dynamic. It does change throughout the day. So I just wanted to give you those levels. And actually, on that note, dingity ding ding ding, the world's largest casino is now open. Best of luck to all. Play responsibly, and if not, have fun. All right, we are off to the races. We are seeing a little bit of strength early this morning, so I'll be watching. Like I said, feel free to screenshot these levels, write them down, but these are all the key levels I'm watching. I think it's a legitimate warning shot from the bear camp if we push red today. We ended up closing on Friday at 6,827. If the bears push us below that, that's a serious warning shot. If we push 6,800, that's a very serious warning shot. And if we close below 6,800, that is very, very serious, especially looking at the current structure. Like you can see, we have very low stability today, 7%. We have a lot of negative gamma. We can legitimately get moving today. So that would be on the bear side of things. On the bullish side of things, if we generically find this support at 840, which is a big one, 850, which is a big one, if we find support in this zone and then start taking out the upside ceiling targets of 75, 90, and then back to 900, obviously that's just a beautiful bullish recovery from what we saw last week. So right now, I think this is pretty apparent that I am still remaining cautiously bullish. My current bias, if I had to guess right now, based on what I'm seeing in flow, and speaking of that, let me reload this, I should say. I am cautiously bullish right now. Obviously, things change very, very quickly, especially on a week when you have double jobs reports and inflation and interest rate decisions from other central banks. So of course, we can't just be married to our bias, but based on the current amount of information, considering the interest rate decision from last week, considering the options flow from last week, considering the major levels from last week, I would say that the bulls are still favored, but obviously it can change. With respect to momentum, 5-minute is bullish, 10-minute is bullish, 30-minute is bullish, and 4-hour is recovering, all with respect to the S&P 500. Looking at the NASDAQ, 5-minute is bullish, 10-minute is bullish, 30-minute is bullish, and 4-hour is recovering. So in the shorter time frames, the 5, the 10, the 30 on the NASDAQ and also on the S&P 500, right now, momentum favors the bulls. Obviously, that is more specific to the world of day trading and scalp trading. The 4-hour, I would love to see this recovery on NQ in the bottom right of your screen. NQ needs to recover. ES is already doing it. So we're still on a relative basis seeing a bit more weakness in the NASDAQ. And that's just most likely going to be the leftover effect from the market's lackluster reaction to both Oracle and Broadcom from last week. So just wanted to pull that out. I'm already getting alerts this morning. I'm getting a nice breakout on Palantir, not on Google, not on AMD, not on Avago. NVIDIA's flat. I'm getting a breakout on Apple. I'm getting a breakout on Tesla. Okay, so Tesla's probably the most interesting one to watch today. Palantir's up there with a potential reversal. Apple's also up there with a potential reversal. No to Google, no to AMD, NVIDIA, not moving. Okay, so as we saw last week, Tesla's crushing. Actually, I have a position on Tesla. Did that get a fill? I have a put credit spread, which is a bullish to neutral. It did get a fill. I just want to double check that. If you are in the Discord, I believe I got my target at, okay, it did get filled right at market open today. So if you are in the Discord, you know my Tesla play already hit my profit target. I believe it was like 80-90% profit target. What was that filled at? Hang on. I just want to update this. Okay, sick. That was actually Tesla filled at 20 cents each. All right, if you are in the Discord, that's updated. Tesla play dropped. But on that note, Tesla's looking great. Palantir and Apple, I find to be interesting. SPY's taking a little bit of a hit. Q's taking a little bit of a hit. Bitcoin is on a relative basis kind of the weakest, quote unquote, major thing we've been paying attention to. And what I'm really calling out here is we are knocking on the door of this trend line breakdown. But you can see ever since the all-time high in early October, lower highs, lower lows, starting at the end of November, kind of going into the Turkey Day, we had some higher highs and some higher lows. Granted, it never flipped the momentum cloud. Remember, these are just all major EMAs that are colorized just to make it a bit easier for the show. But anyway, you can see we started climbing up. It never flipped it, and now we're knocking on a breakdown. Now, when it comes to key levels like this, you have a 50-50 shot, whether it breaks down or not. I mean, best of luck. It's just more of, I like these key levels because they offer minimal risk. So if we start to show recovery out of this, great. You could just risk this recent low and go along. If we start to break down, great. You could risk this recent high or this recent high and play the breakdown. So I wouldn't come into this saying I have to be bullish or bearish. Remember, as an active trader, especially a swing trader, you're just looking for optimal risk to reward opportunities for yourself. So relative to a lot of the other things going on in the market, BTC, Bitcoin, clearly weak. I mean, S&P 500 almost an all-time high. NASDAQ almost hit an all-time high. You have gold almost back to its all-time high. Silver futures right here hitting an all-time high. Copper futures were, wait, this is not the right one. Copper futures. I want to show you copper, which is, that's the wrong exchange though. Here, this one. Well, this is wrong contract, but you can see pretty much hitting an all-time high. So some craziness going on there. I just got a breakdown alert on Avago. So all of a sudden, semiconductors still showing weakness. We got that gap down after their earnings on Friday of last week, and it looks like the sell-off is continuing. I'd be interested in this recovery above 362 because it's pretty much in alignment with this 50 EMA. So I'm still actually looking for a dip buy on it. I get that we hit the all-time high and we're down. So I think that trains a lot of people to be like, oh, I got to be bearish on it. Nope, I'm looking for the dip buy on Avago. Obviously, that's my personal opinion, and do what you want. I'm not your mom. You're in control of your own money. But when quality names like this dip, Avago, AMD, NVIDIA, I just get more interested in adding more, especially to my medium to long-term portfolio. But right now in the shorter term, it did break down. That's lower highs, lower lows. So I'm looking for that recovery above 362, which is currently today's high. Coming back to Palantir, I do like Palantir. Oh, brother. How do I want to play this? If you are in the Discord, I think I need to slap on a Palantir play. How do I want to play it, though? That's the real question. How do I want to play it? Where is Palantir? I need to look at it. I need to understand the vibe of Palantir. I need to understand the vibe of Palantir. Okay. Let's see if we can slap in a play. I'm reaching a little bit, seeing if I could get a slightly better fill. And I guess things were crazy enough that I did get a slightly better fill. So hang on. If you're in the Discord, I just made a new swing plate on Palantir. I'm seeing quite a bit of strength. I like the daily chart. I like the intraday chart. I like the fact that it's showing strength relative to what's going on in the market right now. All right, let me show you that. Okay, so we did that. How do I want to handle it? I want to put in a sitting order. All right, cool. We already have a sitting order. Nice. The other one I'm watching is Apple. You saw that I had alerts on Apple. Was showing strength this morning. I want to see if it can have more strength. It almost looked like, so we popped, I believe that was a new all-time high. Yes, so Apple did hit a new all-time high about 2 weeks ago on the 3rd. Came down, range bound. I was looking for this range breakout above 280 to be kind of the thing that sets us up for another test, maybe of 290. Looks like it opened up and right out of the gate is getting smacked. So this is, I have no live position on Apple, I want to be clear, but it's on my radar to see if we can actually start to recover. Tesla is looking phenomenal. Do I have that on the, where's Tesla? I need to be watching Tesla because this thing is a monster. It's been a monster. Wow. been a monster. I like that. 5-minute is breaking down, going bearish. 30-minute is potentially breaking down, but we do have to wait another 20 minutes. But the 5-minute and the 10-minute are breaking down on the S&P 500. The 5-minute and the 10-minute are breaking down on the NASDAQ. Once again, technically on the 30 minutes breaking down as well, but we do theoretically need to wait another 20 minutes. 4-hour is still showing a little bit of bearishness, while the 4-hour over here is showing actually a rejection. Where are we? I needed to draw this. This was basically this box here on NQ. I like this for when I'm trading Apex and all that good jazz. Right about there. I like to see these highs and lows. So we already took out the pre-market high technically by like a couple ticks in here. If you want to get real specific about it, like we barely took it out. We're coming up to the 50% retracement at basically 275. And if we keep going, the overnight low was basically 25,133. Once again, for the NQ levels, for those of you who might be doing some SINDA funded trading, or maybe you're just trading futures straight up, just wanted to call those levels out to you. I need to get the flow up. We have a lot of movement already this morning. I'm about to show you in a second that I haven't done anything yet today. I've been a quote unquote good boy this morning, and I wasn't doing any like pre-market, post-market trading. So I'm happy that I've kind of kept some sanity, I suppose, to my trading session. But here, let me show you what I have going on. Let me switch this up so you can see. But right here, I have my existing 15 Apex accounts. I have my 5 take profits that I've been slowly grinding higher to try to test. I have 5 new Apexes, the ones that I passed on Friday. A lot of you guys saw that. And unfortunately on Friday, I lost 2 of my FFN accounts, so I had to repurchase those, but I lost 2 evals. They weren't funded ones. So basically, not much has changed. I'm still rocking the evals on take profit, trying to grind those higher. I'm still rocking my Apex, the 15 of them. I have 5 new ones there. And then, well, those were the ones that were passed on Friday. And then on FFN, I had to restart those. So haven't done any trades yet today. And it looks like my data is frozen because we are definitely not at these levels. All right, hang on. Sorry. Looks like I need to disconnect, and disconnect. Oh, wait, no, that one's working. All right, let's reconnect there and reconnect there. The old did you try turning it off and turning it on again type of a situation. Matt, when do you typically roll your futures to the next contract? Do you do it the first day at ask, or do you wait? I wait because I'm looking at the volume per contract. So this is the week of the roll. I roll to the next contract when there's more open interest on the new contract than there is on the current contract. So this is the first day of the roll. So there's not going to be more open interest. Maybe at the end of the day, if today goes wild, there might be, but I doubt it. So I'm probably going to be more so looking to like maybe Wednesday of this week is roughly, but and this is a personal opinion. I'm not telling you that this is like the way everyone in Wall Street does it type of a deal. But in my personal opinion, I switch over to the new contract when it has more open interest than the current contract. That's when I switch to the new front month, but that's just personal management. And I'm not saying that necessarily like that's the law of the land and you have to follow it type of a deal. That's just how I manage it. And I don't know, one of my mentors way back in the day, that's when he told me he switches his. He's like, yeah, it makes more sense for me to be on the new contract when more people are trading the new contract. I was like, oh, that makes sense. I never really questioned it. And that's how I've been doing it ever since. But anyway, we're at 300 on NQ, key psychological level. Palantir, Tesla's looking good. Palantir and Tesla's looking actually legitimately good. It's up 4%. That's crazy. That's crazy. RUM's taking a little bit of a hit this morning. Oracle's taking a hit. Meta slightly green. Microsoft slightly red. Nvidia's green. Avago's taking a hit. I would say Avago and Oracle are still kind of the major criminals of the day, if you will, for lack of a better term. I'm also not liking how Apple's taking such a hit out of the gate. Here's a look at the Mag 7 flow. Even though prices are taking a hit, the delta's popping. So I don't know if I would necessarily be chasing this to the downside because the options market is telling us a slightly different story. People are both buying calls and selling puts. Of course, it could change whenever. I'm just letting you know that there's a clear mismatch. And even on the S&P 500, it just started selling right now, but even with the prices getting hit, generically, the flow was going up. People are, they're selling puts and selling calls. Maybe this is just kind of an end of year, hey, let's get out of positions type of a situation. But look at that. They're selling puts and selling calls. You don't see that too often. As we're kind of waiting for things to, I guess, play out, I do want to let you know, shout out to Spot Gamma. They do a pretty comprehensive analysis of the options market whenever it closes per day. And QQQ seems extreme gamma surge amid mixed overnight action. Check this out. The QQQ, obviously the NASDAQ, ETF shows large gamma positioning at the 100th percentile, indicating heightened sensitivity to price movement and a potential for accelerated directional moves. That's kind of like whenever I'm talking about negative gamma, like whichever way we get going, like get like ready for a real move. So pay attention to that. Index and ETF positioning shows a strong bullish bias, notably in QQQ, driven by significant call buying despite a broader cautious sentiment. So this is another, I guess, piece of data that I'm taking into consideration of dips at this moment are worthwhile to be bought. Just because I'm looking at what the big money's doing, I'm seeing all this buy to opening, especially for today. Someone went pretty hard buying to open December 15th. Folks, today's December 15th on the 621 calls. That's a lot of buying to open. Someone is bullish on the NASDAQ. Looks like they have a little bit of protection going for later on this week. And then SPX, we're seeing some buying for the end of this month at 700. And we're also having people buy puts on vol. So when I net this out, is it the most bullish update I've ever seen? No, but it does favor the bulls. And once again, this is never a end all be all guarantee. Oh, wow. What just happened there? Someone is it is getting a smacked right. Look at that dive. It's not the end all be all. Of course, I would never, ever argue that. But what I would say is, okay, like we're just trying to find an edge. Can we increase our edge over 50-50 and take advantage of those heightened edge situations time and time again with smaller risk? Because if you could do that, if you take smaller risk bets, lower risk bets with an edge, well, in the long run, that's how you make money. That doesn't mean you go all in on one play. I think in the world of retail trading, especially, people, myself included, I'm guilty of this. I'm not really chastising you. I'm, if anything, commenting on my own trading style. I bet too big, and I think many retail traders do the same thing. We hear, oh, we have an edge, so we might as well bet our entire account, when in reality, variance can still come for you. So I just want to remind that everyone of that. AMC just hit an all-time low. No way. Oh, wow. Wow, it did. AMC just hit a new all-time low. Wow. I mean, when did I call it? Back in when it started to fall apart here, September of 24. Called it out in December of 24. Called it out when he did the AMC ape coin that it was just going to shit. It's going to go bankrupt. I've made this call for a while that AMC is going to go bankrupt. It's going to go to whoever owns the bonds, and it's going to get spun up as AMC again, and all equity holders are going to be left with nothing. I called it out. A lot of people said because I called it out, I was a shill, but in reality, I was just right about this. I mean, it's heading towards bankruptcy. It's not something that necessarily happens overnight, but it's not looking good. All right, folks, we are coming up to the top of the transition zone. I am wondering if this is going to be the first major bounce of the day. Like I said, 40 is kind of a key pivot level for me because on the intraday basis, not only does it mean that we're getting into the transition zone, but if you look at kind of the larger context, there is an argument that we're snapping this hedge wall, and this actually might end up becoming more important than 6,800 itself. So I know it kind of seems like a random level, but I think this is actually pretty important. Now, of course, it can sweep below it, and that doesn't necessarily count as a break. It's not one of those things that like so perfect. There's a little bit of art to the science of, oh, are we buying the dip or not, rather than, oh, it just perfectly hit it type of a deal. But I'm very interested in what in the world is happening right here. Very interested. Seeing a little bit of weakness in that AI tech trade. But if you ask me, today is seemingly setting up to be one of those days where weakness in the morning it catches a bottom somewhere, and I'm looking to catch that potential reversal. Now, is that actually going to happen? I have no idea, but I'm kind of getting myself ready for it. I'm getting myself ready to see if I can see a low risk entry to go long and try to play it back to the upside. But that doesn't mean I just arbitrarily do it. Obviously, I want to be mindful of the flow. The Mag 7 flow still favoring the bulls. The SPY took a big hit there, like a very large hit, but maybe this is just a 15-minute algo and it's done, and maybe we're just bouncing off of this. The spot gamma implied one-day move low is 38. I mean, we're pretty much within spitting distance of that. We're at 42 right now. I'll be interested if it takes out 45. Let's see. Let's see. Why did my data mess up like that? Hang on. I'm going to try to disconnect this one. Actually, I think I need to disconnect all of them because I have some data jumps, which I don't think I like. So let me disconnect and reconnect all of my data streams and see if it can patch in, because I'm looking at this one chart and there's about a 50-point range of NQ data missing. Just a hole in. There we go. That fixed it. When in doubt, try turning it off and turning it back on again. It works. In my years of being a computer engineer before I switched to computer science, that was the main thing they taught us. You know, just try disconnecting and reconnecting. I'm giving it a second to kind of load up. Looks like we are getting hit though. I don't know why this chart is taking forever to load up. I hope my trade copier did not get disconnected. It didn't. We're looking good over here. All right, so remember, these are just EMAs. I think it's the 10, the 20, and the 50, but that's another question I get. People think for some reason that there's a mega difference between using like the 20 and the 25, the 20 and the 18. It doesn't. I just get the general vibe. Like, the only reason I have up the EMAs is for a quick way to be like, oh, we're trending up. Oh, we were choppy. Oh, we're trending down. I promise you this, that changing your EMA look back period by like 1 or 2, that's not going to be the difference between you being a profitable trader. It's not like all of a sudden if you're using the 20 EMA, you're losing money and you switch it to the 21 and you're going to like now be fucking Bill Gates. Like it doesn't work like that. I just use it more so for the general vibe to quickly get an idea of the trend rather than me looking at this and saying, oh, did we bounce up? Did we bounce? Like that type of thing. It's like, cool. We were trending up. Now we're trending down. I like it for the general concept of what is the trend. I think, and I'm sure I fell into this pit hole myself, that I was like, oh, like I need to find the best singular one. It's not like that. If there were a singular thing like that, like one little indicator that is like all of a sudden the magic you need to be a profitable trader, it would have been data mined not only by like actual institutions, but at this point, it's not hard to data mine that yourself as a retail trader. That edge would have decayed because of the amount of data mining. Okay, we are cracking a pretty key level, folks, right now. I'm curious if we're bouncing out of here or not. What's interesting here is even though price is going down, we are seeing the options market show appetite for a bounce. So I'm just going off the data and I'm showing you the data to your face right now. That's making me think it's still a dip worthwhile to be bought. But I am seeing bullish appetite in the options market. Mag 7 showing strength. The S&P 500 got hit, tried to recover, just got clearly hit for the second time. The hit itself is there was all this put selling. Someone bought a huge amount of 0 DTE puts. Then there was a bit more selling. And then there was a second round of 0 DTE put purchasing. Remember, the light blue line are 0 DTE puts. So selling, big buy, selling, big buy. And then basically ever since 938, there's just been slow and consistent call selling. That's the green line is the 0 DTE calls. You can see that delta is just dropping. So what does this mean? When this is dropping, that means we're losing positive delta. And when this is dropping, that means we're adding negative delta. So when you add a negative and are removing a positive, that's basically a 2x rate of really dropping, which is what you get here in this combined view. But on the flip side, and I cannot stress this enough, people are buying here. I don't know what to tell you. I don't know why they're buying, but buyers have been basically stepping in on this entire sell-off this morning, which is why I'm not so fully committed to chasing it to the downside. Now, of course, maybe the downside trade was the perfect trade of the day, and maybe we keep selling and maybe things get really bad, and maybe entering at any of these points would have been phenomenal, but I don't know. Right now, all I could tell you is I'm seeing conflicting data, and I notice that my worst trade days are on the days that I see conflicting data, and I choose to go with the set of the data that I'm just like kind of biased to, and I like quote unquote want to happen. But right now, I'm seeing that momentum is getting beaten up. The 5 minute, the 10 minute, the 30 minutes basically going to go bearish. The 5 minute, the 10 minute, the 30 minute basically going to go bearish. I see momentum is actually favoring the bearish side. I see we're coming to some important levels on the S&P 500, but I'm seeing the Mag 7. It's showing strength. It's showing strength. Big downside gap on Tesla though. So that doesn't mean, just because you see a gap, it doesn't have to get filled that day. Remember, you should never be thinking of this game in absolutes of like, nope, but because I see this, it has to play out. It's really just like a distribution of probabilities. And you might be seeing the gap, and maybe you've done some data mining on Tesla and okay, cool. Like when there's a gap, there's like a certain amount of odds of it getting filled. Cool, interesting. But it's never, ever guaranteed. It's never, ever guaranteed. Matt, can you speak on anything about iRobot? Isn't it declaring bankruptcy and going private and being bought out by Amazon, I believe was the news? But what's there to say about it? That's not a tradable opportunity. You already missed it. The announcement is now clearly already priced in. I find of no interest, especially when I see other things in the market moving like this. I'm not going to be playing games with some like random ass play like iRobot, but I believe that's the Roomba company, and I believe they're now being taken private, I believe, by Amazon, but maybe, I don't know. I saw a little blurb about the news, and like a couple seconds into it, I realized I didn't care because I didn't perceive it to be a trading opportunity like at all. Can we talk about football? Well, my fantasy football quarterback was Mahomes, so not looking good for me. Not looking good for me, but the Eagles had a pretty dominant win over the Raiders. If you're a Patriots fan, I feel for you because you guys were just embarrassed in your own stadium. I'm surprised that the Bears are winning as many games as they are. I'm starting to wonder if Joe Burrow is not the golden child of the NFL. There's there's various things to discuss there. Palantir's getting clipped right now. Okay. We're coming up to your boy's danger zone. This white horizontal line at 27 is the closing value from Friday. As in, we're about to see the green to red test. Right now, the market is green. We are above where we closed on Friday. Here, we go red. Generally, this is a natural target level for a lot of traders, so I'm wondering if there's going to be reaction there. I'm still very thoroughly confused. Price is getting hit, but the Mag 7 is showing strength. People are buying calls into this. Looking at the combination of Apple, Amazon, Google, Meta, Microsoft, NVIDIA, and Tesla, even though the market's getting hit right now, I don't know if it's exclusively Tesla. Tesla's showing a lot of strength. What about Apple? Apple is getting hit. Avago, people are selling calls. Microsoft, it got hit. It's now just going flat. MicroStrategy is doing nothing. Meta kind of got hit. Now it's going flat. Netflix got hit, going flat. NVIDIA was getting hit till 940, and now we're seeing strength. Oracle is getting hit. Palantir was showing strength, now going flat. So I suppose maybe a lot of this is just because of Tesla. Like Tesla by and far is showing the most strength today. And it might just be having that large of an influence because the only one I didn't check in on was Amazon. That's the one I missed, Amazon. Why can't I type in Amazon? Also showing weakness. So yeah, I mean, even though they're all showing weakness, Tesla's showing so much strength that we're actually still seeing bullishness across the board here. I suppose looking at the NASDAQ, it is trending down, just caught a pop here off a fresh low at 957. We're 1 minute out. Maybe today is the 10 a.m. reversal again. Obviously, I'm by no means guaranteeing a 10 a.m. reversal. I'm just kind of bringing it up because it seems like 2 to 3 times a week we do see strong 10 a.m. reversals. So I'm kind of curious if it's going to be happening. Honestly, I don't really have strong opinions one way or another because I have no position. So I'm not even at the point of like the hopium and trying to contort the data in a way that I see because I have no position. So we're gonna see. All right, we're about 10 minutes into it. I believe we just got like some sort of wholesale index or I don't know, something like that. And the Qs just went red. The Qs are breaking red and the SPY is not far behind right here. The S&P 500 about to tap. Well, while we're seeing if we actually bounce or not, let me remind you that Public is today's stream partner. If you haven't already, sign up for it. It's pinned to the top of chat. It's in the description of the video. Use that link because you're going to start out at a higher rebate tier. Public is a brokerage. And why you should consider this brokerage relative to other ones, it is the only one where you earn a rebate that every single time you trade an options contract. There are no commission fees and no per contract fees on ETFs and on stocks. That's awesome. Of course, from there, they do have equity trading, stock trading. There's no payment for order flow. They have bond trading, some of the best UI UX. They have crypto trading. They have high yield accounts. They have retirement accounts. They have an API. So for my nerdy coders out there that want to do algorithmic trading, yes, you could do that on Public. It's pretty much a one-stop shop. I honestly think that their shining crown jewel is the fact that you get a rebate every single options contract that you trade. And I think all of that is the reason why you should at least check it out. Like I said, use that link pinned to the top of chat. It's in the description of the video because you're going to start out at a higher rebate tier. But by and far, it's like second to none. By and far, this is the brokerage I trust the most. Like the second place one is very, very deep on the list relative to Public. And obviously, I know that's just my thoughts and opinions, but I think you're going to understand better why I came to those thoughts and opinions when you try it out yourself. So like I said, show Public a little bit of love, pinned to the top of chat in the description of the video. Use that link, higher rebate tier. Great for stock trading, option trading, bond trading, crypto trading, high yield accounts, retirement accounts, algo trading. It pretty much has everything you need. Like I said, pinned to the top of chat in the description of the video. Shout out to Public. And are we seeing this 10 a.m.? Well, now today it's kind of the double situation because not only is it the 10 a.m. reversal we might be talking about, but we also might be talking about bouncing off of the closing value. The white horizontal line is the closing value on SPY and on QQQ. You can see it's exactly where we are at. Tesla, which was leading us higher this morning, showing a little bit of weakness. AMD did pop, gave it back. NVIDIA is starting to pop a little bit. So let's see if it puts in a higher low here. I'm seeing a little bit of strength in the NASDAQ options flow. The Mag 7's giving a bit back here. The S&P 500 is still getting hit. I'm curious if we're going to bottom out. I'm curious if we are in fact going to bottom out right here. The 5-minute, the 10-minute, the 30-minute are all bearish on the ES contract, and the 5-minute, 10-minute, 30-minute, and the 4-hour are all bearish on the NQ contract. So on a relative basis, yes, the NASDAQ is showing a bit more weakness, but let's see, because if you've been in this game for any amount of time, you know that it can change on a moment's notice. Mag 7 flow trying, you know what, let's get up the NASDAQ today too, just because it does seem as if Tesla is uniquely influencing the Mag 7 today. So let's get all three up. This might give us a little bit of a better idea of who's doing what and why they are doing it. But anyway, S&P 500 starting at 945 today, bleeding. The NASDAQ, kind of the same situation. Honestly, the Delta hit's not as bad. The Mag 7 was legitimately showing strength up until about 954. Gave some back and now going flat. Definitely overall trending up on the day. Recently showing a little bit of weakness going into this 10 a.m. reversal. Oh, wow. The S&P 500 already dropping to the bottom of its transition zone. This is, what's the low value? The low value was 801. So right at that technical level of 800. I'm curious if they are going to the flush to the low value from Friday and also the key technical, psychological, and gamma level. Right about, yeah, see here, giant negative gamma node, like a huge negative gamma node. If you are bearish and you're looking for your next realistic target, like, I mean, right here, I'm pointing out the options level. This is a 98 percentile gamma influence. You could see it. It's on not only the full expiration, but also on the 0 DTE. So, yeah, I guess you could watch 815. There's this patch here, but I'm also watching 800 somewhere in that zone. Currently at 825. I guess I wish I took a short at this point. I'm kind of happy I didn't, because as likely as it is that it broke down, you could also just randomly get a bounce. And I don't want to be the person shorting at the low of the day. So even though it's showing some weakness right now, and yeah, of course, out of the gate, I wish I went short. Woulda, coulda, shoulda. You just never know about that type of stuff, because you never know when the buyers step in, as we were talking about with that potential 10 a.m. reversal, 10:05, and all of a sudden the bulls are starting to wake up. Now, will they have enough strength? Did they eat their Wheaties over the weekend? I have no fucking clue. But I am here to tell you that this might be the old switcheroo-rah, you know? The old switchity-doo day. We've seen it a lot before, and I've been the silly clown who in the past has actually basically here at 10:04 be like, oh, I'm going to miss it, so I go short, and then I'm all of a sudden in a short at literally the worst value of the day. We've seen it before, and all of a sudden when you keep touching a hot oven, you maybe realize you should stop touching a hot oven. So I'm watching this bounce. I'm seeing if we can spin out of it, or is it a dead cat bounce? Right now, the jury's out. Why is the jury out? Because you don't know what the next traders are going to do, but this is a reason why you don't chase it to the downside. It's a reason why you don't chase it to the upside. Even if you wanted to go short, you should have waited for a pump to short into. Even if you want to go long, you should wait for a dip to go long into. You never want to be the person chasing, because it means you're just taking on like undue risk. NVIDIA, I'm seeing a nice cup and handle. I'm seeing a higher low, a potential neckline breakout here at 178. Even Tesla caught a bid there. I would love it back above 478. Palantir also caught a bid. So a lot of things at 10:05 caught a bid. I saw the Nasdaq pop a little. The Mag 7, the Delta didn't move much. Obviously, price moved, but maybe it is just all because of Tesla. Obviously, we're seeing a lot of relative strength on Tesla, but this Mag 7 flow is not as bearish as price would have you believe. Now, what is legitimately bearish is what we saw in this buy. It basically, the train went off the track at 9:45. We were showing strength, 9:45 hit, boom, call selling, put buying. We might have seen the extreme here at 10:04. This might be the flip of the day. I'm watching this right here. We popped up. We're going flat. We just got to wait to see what the next batch of traders are doing. Attempting to predict it is extraordinarily difficult. Extraordinarily difficult. Where are we at? VWAP is all the way up here at 86. It is all the way up there at 86. What do we have going on here? Are we going for VWAP? Oh, what's flow look like? What's flow look like? Nasdaq is starting to pick up. SPY is also starting to pick up a little bit. Oh, 5 minute, 10 minute, 30 minute bearish, 5 minute, 10 minute, 30 minute bearish. What are we doing? NQ is right around 200. I'm watching this choppiness right here. Is it trying to put in its first higher low and we bounce off of it? Or are we about to get goosed? Palantir already given some of that recent pop back. NVIDIA attempting to hold. NVIDIA is attempting to hold. Oh, brother. Decisions, decisions, decisions. Decisions, decisions, decisions. All right, let's start drawing some trend lines, folks. When in doubt, draw trend lines, you know? I think that's what Christopher Columbus used to say. When in doubt, draw trend lines. So the SPY, that was a pretty nice pop. Failed, though. The Qs, it was a nice pop, but didn't technically get to that trend line. It is still, as of right now, a lower high, but I'm still curious. Did we put in the low for the day? That's the golden question. Is the SPY's low going to be 681.18? Is the Q's low going to be 612.52? The NASDAQ, it's not really pumping, but it's not selling off anymore. The Mag 7, it is drifting down. The SPY did get demolished till 10:04, and since then, it's questioning what the hell it wants to be doing. Was there news or liquidity hunting? What's the difference between liquidity hunting and trading? I find that so many people are trying to like come up with these fancy fucking terms. It's just buying and selling, guys. Like liquidity hunting, stop loss hunting. Yeah, I mean, we can see where big orders and little orders are, but liquidity hunting, it sounds like you just watched some dude's video or read some sort of, I don't know, Twitter thing, and it sounded fancy. We're liquidity hunting. We are hunting for liquidity today, Pa. We're in the back fryer hunting for the liquidity. Like, dude, what the fuck's that mean? We have trading, I guess. You have people buying and selling and deciding to buy and sell today at lower and lower values. And we are approaching psychological levels. We can see that there's a lot of negative gamma, but we are hunting the liquidity. Just curious if there's any news. My bad on terminology. Nope, no real news as of this morning. But this comes back to how I started this morning of whenever there's like seemingly a red bar, everyone wants an explanation. Everyone's like, why? Why did this happen? And then what's interesting about it is that when it's green, it's almost as if it's expected, and that's just normal. And no one really stops to ask why we go green when we go green. And then when we go even slightly red, everyone's like, dude, I need to know. I need to know. You can thank all the ICT clowns for that. The ICT community is honestly one of the dumbest fucking communities in the world of FinTwit in this entire sphere. I've never met like such a group of people who are so sure that the style in which they trade that loses them money is like the thing that's somehow going to make them money. And what's crazy is you just have like a borderline like infinite amount of like data points from it. You really do. Hang on. You have a crazy amount of data points as well, because so many people try to trade his style and learn from him. And then yet when there's thousands and thousands of people doing it and like less than 5 of them have made money, like just look at the odds of that. Like it just doesn't, the odds of it just doesn't ever make sense in my mind. But hey, who am I? I think I'm on the wrong chart. Unfortunately, I think I just did something really stupid because I was looking on the wrong chart. As we're talking about being dumb, I understand the comedy involved in what just happened. I'm calling someone else dumb, and then I just did the dumb thing of executing a trade inappropriately because I was literally on the wrong chart. So, hey, takes one to know one. I'm uniquely adept at calling out dipshits because I myself am a dipshit. What's his style? He rambles for hours about how he created the algorithm that runs the market, and then for some reason people believe this guy who's never had a profitable trading year in his life. I don't even know if he's had a profitable month in his life. And people are like, this is the guy for me. This is the guy for me. I still wonder why those YouTubers promote ICT concepts and worship him so much. Just because it gets views. Because there is a following, they realize they're going to get views by talking about it. So they talk about it, and then that gets more views. So it kind of becomes this self-fulfilling prophecy. And that's great and all. But the one thing that's missing from that community is more than 5 people making money. So it perpetually blows my fucking mind. Perpetually blows my mind. But I'm kind of getting distracted over here. I'm just almost wondering. I'm like kind of trying to baby this position that I don't necessarily want, but I'm almost wondering if I should just cut it. Like straight up. You know what? Let's look on Bookmap. There's buyers at 55. There's buyers at 50. I just decided to cut it. I don't want to risk. Knowing my luck, it bounces right off of here, but I just cut it because in case it sliced it, I saw that we go to 32. I try to buy the long. Like I said, it wasn't even a proper signal. Well, it was a proper signal, but I was on the wrong chart. I was way, way, way too zoomed out. I thought I was zoomed into my 5-minute chart, and I was not. But anyway, there is a decent amount of sitting buyers right here at 150. I'm curious if it's going to bounce or not. But we are clearly trending down. How much did that fucking mistake cost me? $600. That was a dumbass mistake. That was silly. Silly, silly, silly. So like I said, I can talk on this as the local expert on dumb fucking decisions. Cut it. I did cut it. Yeah. As soon as I said it out loud, when I said, hey, I'm in a position I don't like, should I try to baby it or should I just cut it? I said that out loud and I said, oh, that's kind of dumb. Just cut it. Hence why I just cut it. Whoa, Rob Reiner and wife was killed by their son. I saw that this morning. People are losing their mind, man. The world's gone insane. I didn't know that Rob Reiner himself was considered to be like a polarizing figure in the sense that a lot of people really liked him outside of the word of acting, because I guess he was somewhat of a political activist. It seemed like he had a lot of people who liked him. And then obviously in the world of politics, if you are somewhat known, that means a lot of people are going to dislike you. I didn't know that about him. I kind of knew him acting exclusively from the world of New Girl, which I am a fan of that show. But I saw that news. I was like, dude, this is crazy. And then when the details of it came out, that allegedly right now, I read that his son murdered him and his wife. The son murdered his parents. It just seems crazy. And then it got crazier from that moment when I realized that the internet is fucking soulless and some people were like somehow happy about it. And I just don't understand that, like how people have such like these hardcore political opinions that they're stoked when someone gets like murdered. Like, it's just, what the fuck is going on in this world? Blows my mind. Blows my mind. All right, the Mag 7 was popping until 9:55, was then taking a hit till 10:16, and now it's showing a little bit of life right here. The NASDAQ pretty much just getting hit all day. Same thing with the S&P 500. It had an attempted bounce at 10:04, went flat, and then just got hit here at 10:14. Just got hit once again. We are rapidly approaching the low here at 133, 135, whatever this low is, 132.50. That's the low from basically when the Globex session opened, and we're about to hit it. That is a very natural target. What's going on with the drop? Were there bad numbers? That's always the wrong question. A lot of people want to know why, and they try to like put it within their mental framework of justifying either a stock market bounce or a stock market sell-off. It does not matter if you can explain why. It does not matter. That's always the wrong question, especially as a day trader. Really, as an active trader, it's the wrong question, but it's really the wrong question as a day trader. As a day trader, it's just purely a game of math, and all that really matters is price. And really what matters more important than price is the relative risk and reward of the current price. Remember, you get no extra money. There's no bonus money. There's no medal. There's no cookie at the end of the day if you can explain why other traders decided to do what they decided to do, which is exactly what's happening when people are trying to ask the question why. I understand that it might make you feel better about your current trades, but it does not matter. Like, I cannot stress that enough. It does not matter. Like I said, cool. If you can explain why, if you're like, yeah, no, because the Fed was dovish. Okay, great. Because the Fed was hawkish. No, because Oracle, yeah, whatever. Like, I myself try to look into it sometimes, but remember, it doesn't matter. It's just, it's the wrong question. It is very much the wrong question. Not as a trader, just wondering if something initiated the sell-off. Well, if it doesn't matter to you right now, figure out after the day, because what your focus should be on right now is trading. Without a doubt, your focus should be directly on trading. And maybe later, if you have free time, if you want to dive into the why of it, okay, great. What matters is you're making decisions with your money in real time right now. So do everything in your power to either, if you're a mean reverting trader, great, have at it. If you're a trend following trader, great, have at it. But really, you don't want to, I guess, divvy up your mental resources and start doing other things such as that, answering that question. It just doesn't matter. If you have personal interest in it, hey, have at it. I'm not chastising you. I'm just saying there's a time and place for it. And the time and place for it isn't when you're like actively in a trade, managing a position. Your full focus should just be on that, and basically trying to keep your discipline as strong as you possibly can for, I guess, the active trade. Really, you're trying to keep your mental faculties all focused on keeping yourself disciplined. I would say that's the major thing. And it's not to say that you understanding why something is or isn't happening is bad. It's just kind of a waste of your effort in the short term, at least in my opinion. Rob Reiner actively and publicly targeted Trump as being a Russian asset. The Candace Owens Alex Jones conspiracy sphere has begun mobilizing on this Rob Reiner thing. Yeah, and I think that thing's fucking stupid. Whether you agree with him or not, no one deserves to be murdered in cold blood just because of their thoughts and opinions. Like, no person, just for stating their own thoughts and opinions in America, one of the major things that sets us apart of why we are the best country ever to do this thing, ever. Hang on, I'm setting up a trade. Is because we are allowed to share our thoughts and opinions freely without, well, we're supposed to be doing it without the risk of getting murdered. So I really don't care if you agree with them or if you disagree with them, but if you're saying because he had thoughts and statements that you disagree with, thus that then justifies why you don't give a shit about him getting murdered, that means you're a pretty callous, fucked up person. Like, we're still humans. Like, I'm sure he didn't agree with everything you thought and you said. And I just don't get it. We saw this. We see it seemingly more and more now. You saw it a lot with Charlie Kirk, which was disgusting. Like, I don't know. It's just, we should be able to be human enough that even if you fully disagree with someone, you should understand that they have the legal protections to say what they want and have the thoughts and opinions that they do. And all of a sudden, if you're just like rooting for their like literal murder, that's just fucked up. That's just fucked up. Scandinavian countries are light years ahead. No, they're not. No, they're not. They are not light years ahead. That's crazy talk. You have a whole host of your own issues. You don't have as many freedoms as you do in America, like straight up. I'm trying to manage this position. All right. I see some buyers here at like 117-ish. Fuck, I gotta manage this. That's not really my target. I just wanted to move it because I need to think for a second. Where's the next major key level? It's 25,000 flat. We're at, what's that? That's 110. Do I think it's going to come back? Do I want to give this a second to breathe? Obviously, I don't want to lose money on this play. All right, so no matter what, I'm making some money. I'm short at 130. Stops at 110. What is that? That's 10. Yeah, I'll leave it at 110 for a second. I believe if this hits, I should be up $1,000 on the day for the bigger accounts. What is that? That's 92. I'm afraid to move it to there just because there's such a high chance of it wanting to retag 100, but maybe I shouldn't care about that. That's 20. I'm trying to get my stop at least to break even. So that's, if I put it to 100, my accounts are break even on the day. If I put it to 93, I'm green, but then the chances of it getting knocked out before this sweep to 40 are high. All right, so I'm protected by 71. I think. All right, so no matter what, I should be green on the day, or at least break even on the day. Worst case situation is this trade knocks out. Oh, is it coming? I just don't know if I want to give it a chance. What do we tag? I'm really questioning if I should still leave it at 110, which means if it gets hit, I'm red on the day. Obviously, this trade itself is a green trade. I'm up 20 points. But I do think it's going to sweep 50 because I'm just looking at this. I want to really give it this chance. Mm, 92. I don't like the idea of putting it at 93 because it could always tag 100. But what if it does tag 100, overshoots, tags me out anyway? That's the other thing I'm thinking about. I could just completely say fuck it and move the stop actually to break even, and maybe I still end up where I was. Like, that's a whole nother option. If it takes out 58, I think I'm golden. Decisions. Oh, how mad would I be about that, though? Oh, what is this high? 92. I'm torn. In all reality, my hope right here is that I don't even have to contend with it. I hope it just vomits to my level and I get my money. So that is another lower high where we hit 58, but some buyers are stepping in there. So I see buyers at 51. I see I'm protected by this at 90 though, which I like. All right, I moved my wrist down a little bit. I'm just trying to get lucky with a bit of a flush here. If this trade hits, I could be done for the day, which is really what I'm hoping. Come on, fill it. Go, 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 go. Fill it, fill it, fill it. Done. Done for the day. Done, 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 done. 2 trades today. One was a losing trade. I thought it was reasonable dip buy. We didn't bounce. I took another trade. Done. Done, 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 done. Used the levels, tracked it, kept my shit together. The first trade was kind of a mistake. I was on the wrong chart. I just admitted I was wrong. This is the key of like, hey, get out when you say you should get out, because it's this type of a thing. That was a long trade. I could be long at 187. I would be down by 120 points. I'd be down 2.2K. This is why when you are wrong, get the fuck out. How many live examples have I given you? How many examples have you seen yourself that all of a sudden you held on to this trade for way too long? You knew you were wrong and you held on, you held on, you held on, you held on. When in reality, if you just admitted you were wrong, maybe you could just get on the right side of the trend. This is what I'm telling you. I made the wrong trade. I was on the wrong chart. I was meant to look at the 5-minute chart. That's a major chart that I pay attention to, that and the 10. I saw the wrong structure on the wrong time frame. I was way too zoomed out, admitted I was wrong. I got out. And then guess what? It allowed me the opportunity to get in on the right side of the trade. And not only did I make that loss, but I made an additional 1.2K on top of it. Time and time again, losers add to losers, winners add to winners. When you have a losing trade, if all of a sudden you're either adding to it and you're praying that the dollar cost average works, or if you're just like there sitting with hopium, it doesn't matter. Why did I get out where I got out? Well, I looked over at SPX on my other screen and I see we tagged basically 800. We tagged that low value and I didn't want to risk the chance of bouncing off of it because we easily could. I don't know if we will. Right now, it seems like I was a genius because I bottom ticked it because literally all I did, I know that's an NQ trade, but folks, look at the timing of the trade. It's exactly when we just hit this. That's it. Like, you don't need to overcomplicate this shit. Map out the key levels and react to the key levels. We came to this key level. 50-50 shot, we break down. 50-50 shot, we bounce up. Okay, I was short. If it breaks down, do I make more money? Yes, 50% opportunity. Actually, probably a little bit less because it's such a key level, so we'll say it has a 40% shot. 60% shot, it bounces. Well, I had a losing trade. I was short here at 131. I'm almost actually now back to break even. So think about that distribution. 60% chance it bounces all the way back, and I had a losing trade of 600. It bounces back, knocks me out for break even, so I still have a loss of 600. Or I could have risked it, which I'm giving about a 40% chance to, of the breakdown and the capitulation. Well, why? Why would I take the lower odds, even say it's 50-50? That's how you do it. You just watch the key levels and you react to it accordingly. I'm so fucking sick and tired of people trying to predict it and be like, my algorithm, my system knew we were going to bounce or break. No, you can find counter examples to disprove it, and you can find examples that showcase your call outs being right, but no one is perpetually right. That's not how this game works. It's honestly, I think we would all be better off if you just, every single trade you had, if you just thought you had a 50-50 shot and none of this fucking malarkey of like, no, it's a fucking inverse fair value gap and there's this, what's it called? A Pedialyte array. It's just the dumbest fucking shit. Dude, it really, really is. As a day trader, as a scalp trader, folks, the next bar, I mean, I've made videos on it. We've talked about it. I've showcased it live to you. You have 50-50 shots. That's what trading is. You have a bunch of fucking 50-50 shots, and the only time you're really going to be net profitable is if all of a sudden you can manage your risk. That's what active trading is. And I get it. I get that you can easily fall into the vortex, the dark hole of, no, I got to learn this and that. And all of a sudden, because you put so much time and like, I understand, like, there's probably people watching right now. And I guess I should preface this by saying I'm sorry. There's people watching right now who have put hours and hours and hours and hours into watching fucking absolute fucking retards like ICT, like Trader's Paradise. You've watched all these guys, and you like, just because you've dedicated time to watching them, you don't want to feel like you somehow burned that time and wasted that time. So I understand that inkling, that like that gut reaction to want to defend it, because you don't want someone coming into your life and say, actually, that all that time was a waste. I understand that. I understand that. But maybe just consider the fact, what if I'm not wrong? What if instead of looking at this need to like, oh, I got to defend it because I spent so much time doing it and I don't want it to be a waste, what if you just take it as a part of your market tuition and be like, okay, cool, I learned something, and kind of like the Einstein thing, I learned how to not make a light bulb. I learned the incorrect way to look at the market, and if you ever feel yourself falling back into that, that is a lesson. I'm trying to say that you actually didn't waste your time trading. The only real travesty here is if you continue to do the wrong thing that's causing your accounts to go down and down and down. That's the real waste. So like, whatever. I understand that maybe this is jarring and maybe some of you are going to get upset and you'd be like, no, I like ICT. I've learned so much from him. I like Trader's Paradise. I've learned so much from him. I bet you. Well, like, just look at your own account. Are you making money? Are you net profitable? In the year 2025, are you up? Like, that's one of the beautiful things about the teachings of the market, is we have a very evident scoreboard. In other genres, like whatever, we're talking about Rob Reiner, so using politics as an example, a lot of it is opinionated, it's subjective, it's not objective, so like, you might just not change your opinion. The coolest thing about the market is like, yeah, we could have all these thoughts and opinions, but the best thing is we just have this measurable fucking scoreboard. At the end of the week, the month, the quarter, the year, are you up? Did you make money? That's it. It is honestly that easy, especially the more and more trades you have. I would be the first to admit that, like, over a singular trade, maybe that's not the best showing, because whatever, you might be the best trader, the worst trader in all, and one trade doesn't determine that. So that's why I'm saying over the course of a year, did you make money? You're learning from people, and in the style that you're learning from them, did you make money? And apply it to me. Like, seriously, like, I'm not going to say somehow like I am like sidestepping this rule. If you're here watching me and you're like, dude, man, I've been trying to follow, I've tried to understand it, and you're not profitable with my teachings, maybe I'm not the teacher for you. Like, everything I say, like, truly also apply to me. Maybe I don't explain it in the way, like, maybe you and I just don't see the market in the same way. That's fine. All I can do is explain and showcase what works for me. And then also, just due to my background, I can break down the math of why this other stuff that I hear about is just a fucking travesty. But if you are watching people who are continually losing money, and a high majority of their following is losing money, why the fuck do you think you're going to be any different? This is what the ICT group is. This is what the Trader's Paradise group is. Folks, they're all trying to explain to you, yes, of course, TJR. You think that fucking dweeb knows how to make money actively trading? He caught meme craze. Like, and great. Like, from a financial standpoint, he could buy my entire worth multiple times over. I want to be very, very clear. He has a much stronger social media presence. He has a much better marketing campaign. He's made far more money than I have. But that doesn't mean he's a good trader. Like, obviously, he's not a good trader. He couldn't tell you anything that he would need to about options and delta flow and risk reward. Like, he just doesn't have the quant background. No, just because he doesn't have a quant background, like, he's made money. Like, I'll be the first to say he's made far more money, and not just a little bit more money. He's made exponentially more money than I have. But that's just because he's a really, really good marketer. For example, just because LeBron James has made a bunch of money in the NBA, the fact that he's made that money doesn't mean he's a better trader. Just because he's made more money just means he's very, very good at that thing. Same thing, like with TJR, phenomenal marketer. He is really, really good at the game of social media. ICT is really good at getting absolute fucking dipshits and sheeple to follow him. That doesn't mean they're good at trading. People who are good at trading are more than happy to show you their trading results. You can look at their trades over X amount of period. You can understand their profit factor, their Sharpe ratio, their drawdown, their hit rate, their miss rate. They just show, that's the thing that they are at. Like, boom. You literally just don't need any of that. I don't know what that is, but whatever. But Matt, the thing is, I'm retarded. Hey, you can be retarded and make money trading. You just need to be good at this one thing. Speaking of retards, I myself am retarded. I was talking to my father-in-law yesterday, and I don't know if I had a couple too many Surfsides, this, that, or the other thing, but we were talking about my brother-in-law, who's a little bit younger, and we were at a birthday, and I was trying to do the math of like, he's a bit younger. So I was like, oh, like if you're this guy's age, could you like feasibly be, obviously it's his son? And I said, oh, could you be a great-grandfather? And he's like, wait, what? It's my son. I was like, oh, like I meant, could you be a grandfather? Like, yeah, I'm stupid too. Dude, I'm right there with you. But that's the beautiful thing about right now with social media in the world is you could be as dumb as not understanding the difference between a grandchild and a great-grandchild. That's this guy. That's how dumb I am. But in the world of trading, if you just hone the fact of your risk management, that if there were a holy grail to trading, that is it. The difference between a professional, a person who makes a shitload of money and they just do this for their career versus the 95% of people who fuck this up, that is the difference. It is risk management. They don't have some specialty fucking methodology or this or that or the other thing. Well, the specialty methodology is that. It's risk management. I'm giving you the secret. I'm giving you the holy grail. And it's kind of like Kung Fu Panda where he like looks at what's the thing he's always looking for, the secret, but basically it's just the reflection of himself. Come on, I know some of you guys watch Kung Fu Panda. What am I talking about here? The secret weapon or whatever, where he opens it up and it's just like the golden scroll and it reflects himself and it's like, oh, it was in me. Like, I don't know, it's a cute little story about some power within. I'm giving you the secret here, and as even though it's not some sexy methodology, the dragon scroll thing, it's just looking back at you. Do you control your risk? That's it. That's the secret to trading. I can stream. I've streamed for thousands of hours. I will stream for thousands of hours of Palantir. I've made all these videos. Dude, if I made the one video, like purely, that was the secret of trading, it would be less than 10 seconds long. I would come onto the video shirtless, nipple tassels, and I would say risk management. That would be the only video you ever need about trading. That's it. I could get that video done in 10 seconds. Me, shirtless, nipple tassels, and just risk management. Maybe it's just like shaved into my chest. That's it. And then that's the end of the video. Maybe that's how I'll end my content career. Maybe I'll really just go out on the high point. Like that could be it right there. I'd be like, wow, Matt he really did tell us the whole secret right there. Like, that's it, folks. People want to overcomplicate it because they want some sort of additional complex explanation of why they're losing money, because our stupid little monkey brains are very bad at understanding statistics and particularly variance. Our brains are uniquely bad at accepting the concept of you can do the right thing and lose money, and you could do the wrong thing and make money. Our brains are not wired to understand that for various evolutionary reasons. Like we're just not good at that. And actually that has a lot to do with the most, I guess, weak part of our minds and why we get to addiction and why so many people get addicted to gambling, because it's basically unpredicted reward and it has something to do with the dopamine rush to our brains and yada, yada, yada. It's just bullshit I learned about in my psychology class. But our brains are really bad at accepting variance. Like, we can mathematically understand it, but for our brains to be calm with it, it just doesn't make sense. There are very few things in life that you could do everything right and still be wrong. It's just true. And trading happens to be one of those. Like, you can do everything right and somehow still lose money today. And then that's when our brains start to fucking spiral. Like, that's just what happens. So how do you basically, if I had a magic pill I could sell that like beats that out of our brain, and all of a sudden you trade like a cold, just like robot yourself, dude, I'd be a multi-billionaire. I would never, ever have to trade again. And really, that's the journey of trading, is figuring out whatever you need in your own life to be a disciplined trader. So even that, you guys saw me today, I was questioning it. I got into one trade, and the first thing I said is like, oh, maybe I could manage it. And at first I have a mathematical argument. Hey, it's 50-50. Maybe it does go my way. And I was looking to get the stop to break even. It was very evidently not going to break even. So I just got the fuck out. I got the fuck out. That put me flat. Then I could see the market once again clearly. And then I got on the right side of the trade and made all my money. But even that, doing the right thing, even in that one, because of variance, I could have lost more money, even though it was the right decision. I made the wrong decision by making a fat finger mistake. That trade could have made me a lot of money. That's why you have to get really, really good at judging the quality of your decisions rather than simply looking at the results of the outcome. Matt touches himself to pictures of dumplings. Tom, you're not supposed to talk about the OnlyFans in the live show. We've talked about this before. The OnlyFans is for OnlyFans. The live show's for the live show. You're not supposed to cross-pollinate. And I've even seen you in OnlyFans talking about options levels. Be like, hey, this video of Matt with the vacuum's awesome and all, but did you guys see the negative delta at 6,800? What about all that negative gamma? Like, did you guys see that? Tom, you're crossing content here. You just got to keep one for one and keep one for the other. We've talked about this, and this is like your 18th warning. I was going to say you only get 3, but here we are, dude. My bidet broke, so I had to do a handstand in my shower. Honestly, that's impressive. And here comes the recovery. And here comes the recovery. Mag 7 starting to show life. NASDAQ starting to show life. S&P 500 starting to show life. Oh, do I want to trade this? Matt with a vacuum was suspiciously specific. Dude, anything to get through the weekend. Anything to get through when the markets are closed. Anything. Is this gonna... Did I do the right thing? Golly. I'm attempting to do the right thing in my life. I'm attempting. All right. Speaking of being disciplined, I literally just did something that is kind of noteworthy in how undisciplined it is, but hey, c'est la vie. C'est la vie. Hang on. Let's see what I could do here. Let's see what I could do. All right. If you're in the Discord, I don't know. It's going to be what it's going to be. Front running Piper. Piper did not fire yet today. I'm attempting to front run it. I'm hoping I'm on the right side of Piper for a better fill, but we will be finding out. I like the Tesla bounce. I like the Nvidia bounce. Mag 7 ever since 10:30. So instead of getting the 10 a.m. reversal, we're getting that 10:30 reversal. Let's see if he can actually hold though. We're seeing a little bit of life. Look at that exit, folks. Look at that exit. I got out at 40. The low of the day was 33. That's where your boy took his profits. Basically just paid the bounce off of 6,800. If you went long there, congrats. You could probably ride NQ back up to VWAP. Another very acceptable trade was this breakout bar right here. Actually, if I were still actively trading today, this bar, this breakout bar, so we popped, broke down, pop, broke down. This one popped, we took out the high. You could be long at 38, risking 14. It goes again. You move the stop to break even, so your stop is there tied at 38. You might get to ride it up 100 points back to 41, or it comes back and knocks you out for break even. But regardless, you took all of your risk off the table, and it's literally just an EMA cloud crossover. You could see it. I'm on the 500 tick. You could probably see it on the 1 minute right here. Same thing. This one, you would be long around 60. Your stop's at 38. On the pump up to 200, maybe you move that stop to break even. But basically, this is the trend reversal to the VWAP play, which is a really, really popular strategy. If you missed it, you would wait for the dip back down into the cloud, the reversal off of that, and you risk whatever the most recent low is. Like, boom. We don't need to overcomplicate it. Just accept that there is certain risk with every single trade, and the name of the game is to minimize your risk. Why am I getting blown up with emails? I don't believe you. Do the video. Hey, that's what the big bucks are for. That's what the big bucks are for. So we basically puked all the way down to the low value and bounced right back up to the closing value. Same thing on the Qs. We overshot the closing value, the low value, and we're bouncing right back up to that closing value. And I'm seeing some strength in Tesla and Nvidia. And the other one that was leading the way higher was Palantir. So those are the three that are, from a bullish perspective, catching my attention right now. And that's why they're all very high on my watch list. Apple was for a second, and now it's kind of acting like a little bit of a bitch. It's definitely acting like a little bit of a bitch. But hey, it is what it is. It is. Sometimes it be that way. Sometimes it be that way. Tesla is looking good. Palantir is looking good. Apple was looking good. Now it's a bit of a bitch. Google, no. AMD's maybe recovering. Nvidia's looking good. I'm going to throw Nvidia up there. Meta's trying to recover. Actually, a lot of them are... Avago's looking the weakest. Oracle's looking pretty weak too. But I'm liking what I see on Tesla. I'm liking what I see on Palantir. And I'm liking what I see on Nvidia. Apple, I had high hopes for, but maybe it'll get pushed till later today, maybe even tomorrow. And AMD, I would say, is a dark horse candidate as well. I like that bounce back. Meta, the daily chart, leaves a little bit to be desired. Matt, what time frame do you trade on? I don't trade on a singular time frame. I try to look at confluence among many time frames. So for example, that's why I look at the 5, the 10, the 30, the 4 hour, the 5, the 10, the 30, the 4 hour. And then from there, I also double check it against the daily. My mental framework of the market is that there's no singular time frame that's the best. You want to look at either agreement or disagreement across various time frames. And then what I like is when the medium to larger time frames all agree on one direction. I look for the opposite movement in the smallest of time frames that I care about, which is going to be particular to you. And then I look for that smaller time frame to disagree and then to break back into agreement. And that's where I try to trade. Because if you do it with the smallest time frame, you're minimizing your risk, but then yet you're trading with the larger trend. That's how I approach the market, I suppose. You know GME hype back when Matt has over 1K and GME is only up 2%. No, I haven't talked about GameStop. My viewers are more here for like active trading and across the market. No one gives a fuck about GameStop in here. Like at all. Actually, today was the first day in a while we've talked about those names just because AMC hit a new all-time low, which I predicted. And actually, my real prediction is that it's going to go bankrupt and the bondholders are going to end up holding it. But no one gives a fuck about GameStop. No one gives a fuck about GME. There's just too many other interesting plays going on to give a shit about this movement. Like, there's way too many other exciting plays going on. So the 15-minute chart? Yeah. That's what I really mean to say is the 15-minute chart. How'd you know that? I love GameStop. Good for you. You're wasting your money, but good for you. And when I say wasting your money, like even if it goes up, there's just better opportunities. It looks like we are making that beeline for the VWAP retest. So whether you took out the breakout on the 1 minute or on the whatever time frame you care about, there was a reversal, and the first natural target is obviously going to be VWAP. And then you could also look at the 50% retracement. So VWAP is at 240. The 50% retracement is at 222. So maybe you want to cut it in half. Maybe just 230 is the target. But the point is on the breakout trade, that's a beautiful target. I started following you because of AMC and GME. That's cool. I mean, but markets change, so we have to be dynamic. I never ever presented myself as exclusively talking about GameStop, as exclusively talking about AMC. I believe I always presented myself as talking about what retail traders cared the most about. And at this moment, it seems like retail traders do care the most about the AI trade and kind of sim-funded prop trading. Back in the good old days, yeah, those were the good old days. But remember, I had a whole content career before that. Before that, I was talking about EVs. Before that, I did a lot about like Workhorse and Tesla and Plug. Like A lot of people think I started with GameStop and AMC because that's when I was quote unquote found. But I mean, I was making content for an entire year before that. And I was always trying to make content that I thought retail traders cared the most about. That's really always been my like North Star of content, of trying to cover the topics that retail traders care about the most. Before I covered those, like the news topics of, like I said, Tesla and Workhorse and Plug, which was before AMC and Jimmy. Before that, I try to teach. I try to be like, okay, this is how the EMA is computed and this is how you use it. This is how the MACD is computed. This is how you use it. I try to do algorithmic trading stuff. That was actually like my very first content ever. I remember in the Match Strats days, one of my first pieces of content ever was the code for Turnaround Tuesday. So I try to give the statistical chance of, after a sell-off on a Monday in excess of 1%, the chances of the market being green on Tuesday are very high, hence why it's called Turnaround Tuesday. So not only did I explain that concept, but then I gave the code to algorithmically trade that. And that was actually one of my first videos like ever. And we're talking about back in like 2020 at this point, like early 2020. So there's been a lot of phases and chapters to this particular world. But I understand why a lot of people associate me with AMC and Jamie. Like, I'd be silly to say that isn't where I like got a lot of my following, but obviously the way I was doing somewhat different dynamic stuff before it, I'm doing it after. Just because you take off in something doesn't mean you're married to that thing. There's just a complete difference between AMC and GME, and GME would have done to turn around the company should be acknowledged. I agree with that. If I had to put money into one of those companies, I would bet more on GameStop, far more on GameStop than AMC, for sure. I don't disagree with that. But still, you're comparing AMC and GameStop. GameStop is a better company. But now we have to compare GameStop to the other universe of things that we could theoretically invest in and trade in right now, and it's still very low. So I don't disagree with you. Like, I don't disagree that GameStop is much better than AMC, but that doesn't mean it's worthwhile right now, because there's thousands and thousands of other things to consider. And GameStop, honestly, given the current market, I don't even think it's a top 100 thing to consider right now. It just simply isn't. Low volume, low interest, low movement. It's not a fun play. There is such thing as a capital efficiency, as in unless you're Jerome Powell himself, we all have a finite amount of capital, which means you have to put your bets where you think you have the highest odds, not just like, oh, kind of good odds. Like, you have to compare it to the universe of things you have access to. Bro, I watched you when you first uploaded the quadruple witching video. I busted up, though. It was very informative. Yeah, I think that was my peak content ever. I just grabbed a few puts on Tesla, but going to get over very soon. Why would you get puts on Tesla? It's just showing strength. Tesla daily chart, legitimate breakout. Options flow on Tesla, like just nothing but strength, even in the face of the NASDAQ getting hit this morning. You're just fighting trend. So maybe you saw... 480, is 480 even a key level? I guess, like, if you're saying, no, I just think it's going to double top, I understand the risk reward perspective, but then just be very disciplined that if it starts to go, just get the hell out. But I find that life is far, far easier trading with trend than trying to fight it. What are your thoughts on the Michael Burry GameStop tweet? No thoughts, just don't give a shit. So maybe a breakdown on GME will actually read their earnings report instead of just basing it on what short sellers do to their earnings. No, short sellers don't do anything to earnings. Short sellers are people who just place bets against it, but the earnings are the earnings. The earnings are a fundamental snapshot of the company. Short sellers are obviously bearish players in the market. Short sellers don't do anything to the earnings. The potential for GameStop to goes up is if Ryan Cohen becomes the modern day Carl Icahn or Berkshire Hathaway and turns it into an investment vehicle, and he ends up doing really well in the market. The future of GameStop has nothing to do with the way we used to think of GameStop. But no, I read the earnings. I read a lot of earnings. It was not good. Like, when I say not good, I'm saying relative to the universe of other things you could place money on right now, there was nothing in those earnings that moved the needle, like whatsoever. If you saw something in those earnings that you're like, wow, this makes it like just such a good play relative to what's going on in the equities market, the crypto market, the futures market, or the commodities market, you don't know how to do an analysis. You're probably just really biased and you want it to go up and you're like, yeah, no, it's good. Well, it might be good to its own relative shit self, but that doesn't mean it's good relative to the entire market. Would I mind looking at Equity Hub on Tesla? No, it seems like Tesla's getting a lot of interest right now. Let's see what's going on. Equity Hub, what's going on with old Tesla? Where are the key levels on Tesla? So Tesla currently trading at 478. The target is so evidently 500. You have now a backstop of 475 and a backstop of 465. That's going to be, because we're on the north side of it, you have support there, you have support there, and a very, very evident natural target. It's a high vol point. It's a lot of negative gamma. There's a lot of people tagging 500. That is just pretty evident. I'm not seeing much at 480, folks. So it obviously there's intraday technical resistance there, but from a option standpoint, I mean, 500 is just dominant. Actually, let me cover that up so we can see 465. That's even 490 is more important than 480 and 485. And you have this support at 475. I started following this channel for the Wheel of Destiny and tarot cards. Sad that it's just a shell of itself now. Honestly, I think that's the most honest and earnest criticism anyone's given me today. I very much, if you ended up following me for AMC and GME and want me to keep talking about AMC and GME, I honestly don't give a shit because you're missing the point of what it is to be a trader. But for this particular criticism, if you followed me for the Wheel of Destiny and tarot cards and you're just like holding on to this like glimmer of hope that maybe I'll return to that, I could understand that dismay. I think that's actually very, very fair and astute criticism of the fall off of this channel. I can't even clap back. I can't even fight with you on that one, honestly. I truly can't. You're just right. You're right. I'm wrong. And maybe the year of 2026, I'll be able to bring it back. I came for the content. I stayed because of the tinfoil hats, magnets, and rocket ships. What is the best path if you have $5 put on IRBT? Thanks. I don't think the stock's going to be moving at all. The deal's already done. IRBT. Yeah, there's no movement. The announcement's been made. It's already been digested. It's not moving from here unless they somehow like pull out of the deal. But I believe it's just getting consumed by Amazon. I wouldn't be expecting that thing to move at all. See you later, Turf Dog. Oh, wow. It's already 11. Holy cow. That, I did not see that coming. Don't forget about the Mormon condos. Those were the days. Those Mormons and those condos. Mag 7 popped, dropped, popped, going flat. NASDAQ dropped, flat, dropped, kind of popped, giving it back. S&P 500 attempted to recover off of 6,800, getting hit now, and we are seeing some lackluster reaction. Lackluster. What are my thoughts on SoFi right now? That it's doing a whole bunch of fucking nothing. Once again, it's this concept of capital efficiency and trade something that isn't grinding sideways. If it's grinding sideways, there is a play. You just sell premium. You can iron condor it. I'm not saying that there's literally no play you can do, but what about this? Like, it was bullish, breakdown, recovery, and now it's just, look at all the EMAs are going. It's not, by definition, this is not trending. So if you really want to play it, sell premium. But for me, I think it's more enjoyable to play things that are trending, whether up or down. I don't care if it's trending up or down, but I do want to play a trend, and there seems to be no trend on this play at the moment. Obviously, it can trend. We saw a trend up. We saw a trend down. We saw a big trend up, and now we're just seeing that it's like awkwardly in the middle. It has an upside gap fill to 28.48. It has a downside gap fill to 25.45. And I'm not seeing much exciting movement at all. I wouldn't play this ticker at the moment, but if I had to play it right now, I would just sell premium. I would just play the theta decay, the vol crush, the delta decay. I would just let all the premium decay. But even that, I'm not the biggest fan of it, if you will. All right, folks, that's kind of it. Before I go, let me show you one last little shot here of all the key levels on the day. Obviously, we opened up above the transition zone. We vomited below it. We attempted to bounce. The market said no. We shot all the way down to that low value from Friday. We bounced off of it, try to get back up into the transition zone. We try to get back up above all the exponential moving averages. At this moment, the market said no, but this might be a higher low. I'm wondering if we're going to bounce off of it. Obviously, a telltale intraday breakout would be above 6,830. From there, I'd be watching 40 and then 50. On the flip side, if this is just a dead cat bounce, if we start to snap 810, 812, if we snap that, I'd be looking for the retest of 800. And if we don't hold that, I'd be looking for the downside gap fill of 6776. So there's the bull case, there's the bear case. Obviously, watch options flow. Shout out to Public. They are the stream partner of today. It is free to download. It is free to sign up. Pinned to the top of chat in the description of the video. Use that link for the higher rebate tier. And I also want to remind you, you have today and tomorrow to take advantage of the 90% off of Apex. So they will be the partner of tomorrow's show. But I just wanted to let you know, so just in case you want to pass today and then go to the PAs tomorrow, so you have one day on the very cheap ones to be able to trade on PAs, I figured I should let you know. But you have today's trading session and tomorrow's trading session to take advantage of the 90% off. Folks, that's what I have for you right now. I'm going to go hang out in the Discord. I'm going to go see what they're up to. We're going to go chop it up. So I hope to see you there in the Goonie Trading Discord. If not, if you don't want to join or if you're just busy today, I wish you the best of luck. I hope you make a buttload of money. We will be posting an update video later on today, so make sure your notifications are on. And then we're going to be streaming once again tomorrow morning. I appreciate all the good vibes. I'll catch you in the next one. Peace.